So we're going to be doing shorts here. All right, and I'll be aiming for that 21,490. I'm going to stop in here just above that recent high. So it should break down below 518, 515. Should it do that, it should start to really accelerate down below 21,506. And then right down there at that 21,490, I gave you guidance today. So you're about to see who the real market maker is. You guys are so fun. Let's add some more in here. An order block right there. Let me annotate that for you. Right here on this candle. Change in state of delivery. And then we'll also annotate that with negative OP. Alright. Now I'm going to extend this stop down to just a little bit above my entry. That should be okay. It looks like it's done enough to do a turtle soup on the 1038 high. Alright, so we're now inside of the imbalance. I'm just watching this. I want to see it act as an inversion fair value gap. Since I'm working with a 5-second chart, I'm going to simply ignore color changing it. Just know that I'm expecting it to trade as a premium ray. It just poked itself below it. Now I want to see it work the upper half and then reject that. We have a small little tiny sell side imbalance, buy side efficiency at the top of that imbalance. That's so far, that's actually, I like that right there. Now we can come back in one more time. It's good enough. All right, and I think the volume imbalance at 523 or so, I think that's going to stay open. That'll act like a breakaway gap. The problem is with the 5-second chart, there's going to be a lot of that. So you really have to know what you're looking for. A volume imbalance is traded into that right there. So I want to see it start getting real heavy in here. One more time just to fill in that volume imbalance for good measure and the low of that inefficiency. I'm trading internally, I'm trading it with a inversion fair value gap aspect to it. So I don't want to take my focus away. That's what we're looking for right there. Some acceleration. And I'm going to have to raise this chart up in case it pierces the 21,490 level and doesn't flash the fill. All right. Let's cover costs and commissions. Now, admittedly, I want to see it break down here. I don't want to see it come back up into that imbalance at the 518 level. Needs to stay heavy in here. Meaning I don't want to see any kind of rallies. As long as we're staying below that red box, order flow for me is bearish. So the algorithm will start looking for any tiny little imbalance or up close candle to offer smart money that's using algorithms for their entry models to fire in and add shorts and then run right to that liquidity to 21,490 or just below it. Now, if it just breaks below and keeps on going lower, I could care less. But I gave you guidance this morning, expecting what I wanted to see here. So taking the 8 o'clock in the morning high, and then going down to the 21,490. I'm not going to be able to trade anything as a rally to 21,580. I still think that's a long-term daily chart draw on liquidity. I'm not going to be able to do that for time purposes today. So I'm trying to facilitate this opportunity here to show you that Daddy's back in the days of market making, when I used to turn the screws on people, it used to entertain me. But now I'm trying to put you on the right side of the marketplace, folks. Just listen. Just listen.